Welcome to P&D Uniforms and Accessories, where we treat all of our customers just like family. Your one-stop shop for all things uniforms. We carry a wide selection of top-quality uniforms from school to medical scrubs, plus church and choir gear. P&D Uniforms and Accessories have been in business for over 15 years. We are centrally located at 20936 Kelly Road in East Point, Michigan. Open 6 days a week, Monday through Saturday. Give us a call today, 586-777-3801. P&D Uniforms.
Welcome back to the show. I am so happy and grateful that you have been able to make it back and catch the afternoon part of the Living Legacy Group Live. Today we're going to have Oliver Velez going through a lesson today on improve your confidence by identifying and executing trades. So this is kind of a cool little caveat to what I'm experiencing as I, get to know this token that I've been trading for the last 3 weeks. And, that's the thing. Oh, excuse me. Once you learn the rhythm of a certain thing, you can, pretty much play the game. And, I just keep going over my head all the plays last night in the game. And, you can't win them all. You definitely can't win them all, but the ones that you can win can impact your life so dramatically that you feel like you can conquer the world. And that's what I feel right now. I don't feel any nervousness or any kind of FOMO now because I've adapted to the routine of getting into the markets and being able to know where are you at. Are you on the bottom? Are you in the middle? Are you on the side? Or are you on the top? So thanks again for joining me, and we're going to get right into the lesson with Oliver Velez and improve your confidence identifying and executing trades.
What I want to cover with you today is basically 2 things. The first one is how often traders fail to recognize the differences and similarities between 2 types of market moves: one-bar surges and steady, uninterrupted movements. I'm going to shed light on a problem that many traders often overlook or struggle to identify, and more importantly, I'll show you how to solve it. The challenge most traders face is missing out on potential opportunities because they fail to distinguish between these types of moves. They might enter or exit a trade at the wrong time, leading to missed profits or unnecessary losses. The second thing, and probably the main focus of today, is something I have been teaching numerous times, but in this video I'm sharing what I consider the best tips of how to trade perfectly the top or 1/3 retracement. So in this video, I'll guide you step by step on how to identify these moves correctly and capitalize on them. I am Oliver Velez, and this is your path to professional trading.
I wanted to use today to revisit something that I think is increasingly becoming more important.
Want to know how I took my business to the next level? It's simple. It's Shopify. Shopify has all the tools in one place to run your business.
Folks, I am going to do us a favor.
In this market, it's something that we've touched upon before.
So that we don't miss this into a whole entirety, I'm going to be switching accounts. Pull this one. And I'm going to be switching accounts so that way we don't get interrupted with commercials and all that good kind of stuff here. Hang on one. Am I even talking? Am I? Oh, yeah, I'm on. So. Okay, here we go. Let's find Oliver. Let's find Oliver Velez. Gotta find Oliver in here. All right. That's the one. This was made only 17 hours ago. So that's why you're getting this fresh. 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 Okay. Here we go.
What I want to cover with you today is basically two things. The first one is how often traders fail to recognize the differences and similarities between two types of market moves: one bar surges and steady, uninterrupted movements. I'm going to shed light on a problem that many traders often overlook or struggle to identify, and more importantly, I'll show you how to solve it. The challenge most traders face is missing out on potential opportunities because they fail to distinguish between these types of moves. They might enter or exit a trade at the wrong time, leading to missed profits or unnecessary losses. The second thing, and probably the main focus of today, is something I have been teaching numerous times, but in this video I'm sharing what I consider the best tips of how to trade perfectly the top or 1/3 retracement. So in this video, I'll guide you step by step on how to identify these moves correctly and capitalize on them. I am Oliver Velez, and this is your path to professional trading.
I wanted to use today to revisit something that I think is increasingly becoming more important in this market environment. It's something that we've touched upon before, but remember, a lot of times repetition has a very good value in repeating, going over something. Each time you come back to a concept, you come back to it in a different way. It hits you differently, even though you've gone over it before, because experience changes you. And so as you go out into the world with a specific concept, gain experience with that concept, and come back to that concept in an educational way, that education the second time hits you deeper, hits you differently because of the experience you've gained. So it's important for us to come back to these things every now and then. And what I want to cover with you today is I want to cover with you two specific things. One is that a move in a stock or any financial instrument can be a surge in the form of one bar. Let's say this move to the upside here in the form of one bar. Or you can get just a steady, nearly uninterrupted move. Now, you can have a little interrupt there, but we're basically just talking about kind of steady, uninterrupted move versus the power surge. Now, in my drawings, this move is about the same in terms of price. It got there differently, but still, they're both still one move. So one move can be one surge, or it can be a series of bars that get that accomplish a decent price move.
Uh-oh, we got something going on here. Oh, come on, man. Buffering issue. Hopefully it doesn't last too long. Want to say hi to everybody. And,
without a great deal of hiccups or interruption. So when there's no interruption or very little interruption in the flow of a series of bars, I consider it one move. That's very important to understand. Another term that I've constantly used with this is leg. All right. So you can have, as an example, a stock has this series of bars that accomplish one leg, and then you get the interrupt. Right? That's the interrupt. And then you get, after the interrupt, the second leg. Okay? So that's leg one, and this is leg two, and the pullback is the interrupt. So my point here is that a single move can happen in the form of a one bar power surge, or it can happen in a series of bars that have little to no interruption. Now, where is this going?
we might have to take it down into the regular screen. Might be using too much CPU. So let me drop that.
Leads us to what I really want to talk to you about today, which is the top, and of course on the downside, bottom, but let's assume the upside, the top 1/3 zone. I always want, whenever you identify something with a surge or something, whether it's a one bar surge or move or a multiple bar surge or move, I always want you to be conscious of that top third of the surge. The top third of a surge or of a move, say that's it, does include a little bit above it into the third. That's what I mean by the top. It's a little bit past it. Okay? So that top, this is the zone right there. Okay? If it's in the form of a multiple bar move, then that top third also applies like this. It's a little bit past it, but in the top portion of the move. That's the zone. Tell me you understand this so far. Grabbing that top third of a single bar surge or the top third of a multiple bar surge with little to no interruption, and the third zone does start a little bit beyond the move itself. Take a look at this move. This is that multiple bar surge. You see? And then you would consider this the interrupt. All right? So see the multiple bar nature. Notice how there's little to no interrupt. The interrupt comes here, but there's little to no interrupt here. Yeah, there's a tiny red bar there, but that's not an interrupt. An interrupt is time-based. You know, it's multiple bars to create an interrupt, not one bar. One bar does not create an interrupt. It's multiple bars that create an interrupt. This is an interrupt in the flow of this multiple bar surge. Okay? So once we get that move, this is really the last bar of the surge. You start a little above it, and there's that top third. Okay? Now, what's the point of this? The odds of follow through are extraordinarily high after the odds of continued movement is very high if the pause stays in the top third. That pause can stay in the top third with a dip, or it can just rattle around, but you're typically going to go higher. Okay, we've talked about cutting every move in half. I'm focusing on the top third of surges now, multiple bar surges and single bar surges. Now, so see how this is just having trouble breaking the third, and we know it's a pause because it's taking multiple bars. Now, so we would assume here that this is going to break out to new highs because it can't get past the third, the top third. Some traders might say, well, Oliver, wouldn't you do the top third here? Of this move? Yes. Wouldn't you do it here? Yes. You keep doing it. Do you understand? In no case was the top third ever broken. So you just keep doing it. But, right, so you say, well, okay, I didn't get a pause, so now I'm going to see if we get a pause there. Didn't get a pause there. Now I'm going to see if we get a pause there. And you see, we start getting a pause. Now you're saying, wow, this can't seem to break the third. We're going higher. Okay? I need to make sure that's clear. So you might get this multiple bar surge and then start looking for the top third, but then you get another bar surge that extends the surge. You say, okay, I'm going to start from the top of this one. And then another bar surge. And you say, oh, well, now I'm going to start from the top of this one until you get the stock starting to stall out on you. Now that top third analysis becomes very important. Here, you have a top third, but then you don't get a pause. It just rocks again. Well, okay, so now we're going to do top third analysis here. Now, remember, when you get a tail, remember what you can always do with tails for greater clarity. You can remove the tail. So there is your inability to break the third. We're going higher. There were so many people shorting Bitcoin here because of this former top and the drop before. So they considered this resistance. I was buying here because I could see that it couldn't break the third. Also, the way it got there was so powerful, I assumed follow through. It didn't get there like this, so it didn't drop and get there like that, like it was struggling to get there. It got there like this cat this cat fell off the building but is not dead, right? So anyway, let's take that tail off, and you can see that we never got past that third. Okay, now what you can do whenever you get some type of pause and you go here, this is one leg, that becomes a separate leg. Now, the third is not incorporating all of it. The third is now on the second leg. What's the second leg third? Right there. You see? That's the second leg third. This one's over. So this one, leg one, is over. Now it's leg two. All right. And you see here, this bar here? Now what's top third? Remember, you start a little bit past it, right? So far, we're hanging in the top third zone. And remember, once again, let me draw this again. That top third zone is a little bit past it, right? Always want you to remember that. So this would suggest statistically what? You tell me. Next stop, what? What would this so far be statistically telling you should happen next? You tell me. Right? So shorts are getting wrecked on this largely because they don't even know the top third concept. Now, if I were dumb enough to short Bitcoin, I don't short Bitcoin. I think it's dumb. But if I were dumb enough to short it, all right, what Bitcoin would have to do, it would have to do a lot of damage. So it would have to do a lot of damage this way, right? And then on that damage, I would have to see it bounce and fail to take out half of the damage and short it there. I would not be trying to grab the first one. I think that's the stupid mistake that the shorts make. They try to grab the first one like, okay, here's the first damaged move here. And then boom, they get wrecked. And so now they're shorting again here. And boom, they get wrecked. The best way on something that's been strong is to really catch. You have to catch the bounce after damage. You understand? That's the best way. You don't try to catch these, the initial ones, because the initial ones after strength whip you back a lot of times. Does that make sense? And like, I would not short Bitcoin, but if I were, I'd be waiting for that. Everyone's trying to catch the start of the move. All right. Should we hold for breakout in that case to get in? That's a good question. So let's say, and let's not talk about Bitcoin because Bitcoin's a little different. It's just I'm using Bitcoin as the example to show you the 1/3. Bars are pretty clear here, but assuming that just generally talking about this concept, if you're not in it already, how do you get in it? Well, I would get in it on the break. Now, how do you know the break? Well, you want to find in the pause, what's the biggest red bar? So check this out. Remember, ignore the tails. So let's take the tails away. Let me show you. Take all the tails away. Whenever you see tails, if you're not playing the tail, take the tails away and give yourself this clear picture. Now, what's the biggest? You see these red bars? Let me get this pen here right here. So you got this red bar, this one, this one, this one. I would say the biggest one is this one. It's hard. It's between this one and that one. But basically, you can just do right there. Remember, the concept of clearing is to clear 5 bars. So you can use the clearing concept or the biggest red bar concept. They both work perfectly fine. So if we're rattling around, I try to look for the biggest, fattest red bar in that rattling around. And if the stock takes out the most troublesome bar, then that's all I need. Or if the stock gives me a clearing bar, that's all I need. I've already got the 1/3 concept telling me we're higher price. It's just a matter of when I strike. All right. And to gain clarity, remove the tails, and then it becomes clear for you. All right. So don't forget that. Remove the tails, guys. And that's on both sides. Both sides. So let's do it. Let me show you. Let me show you how clean this gets when you remove tails. Tails are only important if you really are playing it as a tail bar play. Remove them on both sides. Watch how clean this gets. Do you see that? You see how clean that gets and clear that this is the buy point? Let me know if that's clear for you. You don't need them unless you're playing them. Right? So in this case, it's the biggest red bar in the pause right there. You understand? There are so many people floating around in the markets that they don't know these things, right? But you do. Now, guys, nothing is 100%. These are all still guidelines, but they're very, very, very good guidelines. If we could find something that's 100%, we wouldn't need stops, and we'd just save up for the 100% item and just put everything on the line when it happens. We don't have that. Nothing's 100%, so you always have to be able to protect yourself from that small percentage of them that don't work. But I am telling you, this 1/3 concept will let you know a lot of things. Now, let me go to the final things that I want you to utilize this concept for, okay? This is where the 1/3 concept comes into play. Let's say, for instance, you were long Bitcoin off of this bottoming tail bar play right at the flat 200. Boom. All right, beautiful play. You get up here in a powerful way, up near this resistance here in a powerful way. You see the way you got there. And you're like, all right, is this resistance likely to bring Bitcoin back in, or is it likely to go up? Well, I'm not sure, but the way it got there and the fact that it can't break 1/3 has me leaning toward higher prices. So you hold back from profit taking. Not that we profit take in Bitcoin, but I'm just using Bitcoin like it's anything else. The way it got there tells me there's a lot of gas left in the tank. The fact that 1/3, maybe I shouldn't take all the profits off at resistance here. Maybe I should leave something in. Maybe I should even think about adding back if we break. You understand? So, same thing here. We can't seem to break the 1/3. Maybe I should think about adding to this versus profit taking all. You understand? So it'll help you know when you should take all of the profits off versus not.
Mm-hmm.
If your play gets, if your winning play creates a power surge, that's how you got your gain. You at this point, you didn't know it was your win was going to be a power surge, but it got you a big gain through a power surge. That's telling you that you probably should not take all of it off, because that power surge says there's still a lot of gas left. Now you mark the third zone and consider any profits you taken being added on the break again. Okay? Same thing here. The way you get here is pretty powerful. Even if you took some profits there, maybe because of the way you got your profits, you don't want to take all. But even if you did and it stays in the third, you might want to jump back in or add to your existing play on the break out of the top third rest. The last thing I will tell you is that the pause in the top third, it's not quite halfway. So I don't know how to explain this. Like sometimes in RBI, a lot of times in RBI like that, here's a move, a slight pause in the middle. That, I mean, the miniature pause is usually a lot of times it's somewhere around the half. What I have found is that this, when you get a real power surge and the stock holds the top third and moves, this won't always be the middle, but almost the middle. So if this was, I don't know, a 40, if this is 40, this will be like 25 more up or something like that. Or 25 to 30 up. It's not quite doubling the other leg, but you almost get there. So let's look at it here. This move here, here's your pause. It's not quite doubling, but it almost got there.
Oh, I see.
All right. This move here and then pause.
Pause.
Boom. It didn't quite double leg one, but it almost got there. And that's what I found that is the most repetitive. That second leg out of the pause doesn't quite statistically double the first leg.
I get
but
it.
It almost gets there.
I get it.
So let's say, let's say it's 70% of the first leg, something like that. Do you follow what I'm saying?
Yep.
And that can help you kind of come up with a general gauge of where the next leg should go statistically. Tell me you understand that.
I understand it. Now I'm going to show you guys.
And let's say this is 100 and leg 2 will be like 70. Got it?
Yep.
So judging from this, let's call that 25. And let's call this, let's round it off to 28.5. So here's 25, right? So that's 3.5. All right. So let's just call that, that's 9. Let's call it 32. Between 31 and 32. Was it 28, 29, and 29, 30? Yeah, about, no, so let's call it, I'm sorry, I got that number's too big. That's too big. It's 30, 31. Just rough. But it's like the distance here, if that's 100%, you know, this is like 70%. The next move is statistically about 70% of that move.
Hmm.
Yeah, this is very much like a whale. It's very much like a whale pause. It's very much like a whale pause. So on that's a good point, Herb. So on the concepts I teach you, if we were to erase this, right? If we were to erase this and just look at this trade, right? Like let's say this is a trade off the open or something, right? And so you've got here is your igniting play. Here's your first RBI. Here's your profit. Here's your real profit taking point. This can pause this way or dip, and then this would be your whale complete. So, you know, boom. First color change. Pull back, and then new high. But we'll see. All right, guys, so that's what I want to cover with you today. That 1/3 concept. All right. But this only works if the move is a surge. There are moves that are not surges. Do you understand? It doesn't work on moves that are not surges. So remember, surge is stronger than just a regular move to the upside. This is a surge. You understand? This is not normal. That's a surge.
Even though it's little.
You see, it doesn't work if it's just a normal grind to the upside, you know, or it's a little more gradual. No, we're talking something that has more power, more fuel behind it, more oomph, more violence in it. That's when the third concept comes into play. It's got more violence, it's more power, it's more oomph. It's packing a lot more power in its punches. Then that 1/3 comes into play.
And there you have it, traders, a powerful concept that will dramatically change your trading.
All right. Thank you so much, Oliver. And what we're going to do is we're going to actually look at our charts to see if we can find some of those surges that he was talking about. I know that I was finding those surges in this token. And I think I can probably, let's first look at a 5-minute chart. Okay. We're going to get rid of some of these lines to not distract us. We had these lines in here for a certain reason, but I'm going to keep just a few lines in there. So these are going to be lines I'm going to leave in there because of the fact that this is a entry point that I had first entered the market in last week, and we watched it surge above and go below. That's how we got trapped out. So that's what we're trying to get in habit of, not being trapped into these plays. If you, as you can see, I got trapped into this play. Let me see if I can, yeah. So I got trapped into this play because of this move here. And what he was saying was, let me see if I can, this is a 1 hour chart. Let me break it down maybe into a 30-minute. Maybe we can see that. Okay, see this, let's see if we can see, oh, there's one of those pauses, I would say. How about a 5-minute chart? Let's find 5-minute chart. I know where you can find them in the 5-minute chart because there were long pauses. That's a power surge, but then there's a pause. There's a power surge, but then this came down too far. So I don't know if that would be considered a pause or a pullback. You know how it pulled all the way back? So we're going to see if we can find one of those. I can actually expand this out. I'm going to actually expand it out. So as we look for these, here we go. This was one right here. This is almost what he was talking about, but we would have to break this down into a 1 minute to see this area. So let's see if we can pull it all the way back. We got to be smooth in doing it. Was one of those one pull. I thought it was going to go that one, but no, I set that one there so that way I can identify from where I'm at in the market how much I could gain if I just leave it. Let me explain it to you this way. When you look at my positions, my highest position is 136.8. My lowest position is 1350. So leaving this at 1350, I will be able to collect $135 from it when it reaches the point where the older, mature trades are. Like this one, I'll be looking to collect on that one and all of these. So we're waiting for that power surge that he's talking about. And when we get that power surge, you'll be able to see the pause. Because I seen it in here, and see if I can. Because see, you know, the price was never below those golden bars here. They were never below those gold bars until this weekend. And here we go. We're going to start to go up. And this is where, oh, yeah, we'll go right to the point. Yeah, here we are. So right here was maintenance time. So there was this gap up. Then it started to go down again. I thought it was going to go back down to there, but it ended up faking me out again. Because if you could, these green lines here, these are past trades. So we're going to go, and this is why we go through this. So because I know you're going to go through it. If you've opened your Pocket Options account and you're following along, and you have done some of the lessons, and you've got the rhythm down, and you're making trades, and some things, you know, don't work out. Had I known for the weekend, I talked to a friend about this. He's been into crypto for a while, and he noticed the same thing. These coins and tokens, even though they are 24-hour coins like Bitcoin and stuff like that, they do run a different habit during the week opposed to the weekend. And I don't know if it's, the volatility or the, here we go. So this is where Brother Hayes got stopped out, or not stopped out, but trapped. So you see this, I seen this, and I said, oh man, I missed it. And that was at like 1 a.m. Yeah. So then I'm sleeping and we missed this one too. And then I woke up and I said, oh man. And this was at, 2 o'clock in the morning. And I said, oh man, it might. I'm looking at this. So I'm looking at this right here and I'm noticing that 200 is raised up. It's going in an upward trajectory. And then I look and I notice that this formed another, what did he call that? It's away from the 200 and away from the 8 is away from the 20. So I've said, okay, I'll get in right here and hopefully it will start to go up. But nope, this was Saturday. The 26. When was the 26? When was the 26? Check right now. The 26 was Friday. Yeah. And boom, it started going down. Now, had I remembered last time, I could have made I could have shorted this token and just watched it go all the way down and then collect all the way up. But I learned that was a part of this learning curve, this learning thing. Once you do it too many times wrong, you're bound to not do that anymore because it does hurt. So now when you fast forward, this is where we're at. And as we wait, we're waiting for that power surge up because this is consolidation. All of this stuff right here. Look how close that is to that 20. Look at that. We can't even spread it open anymore because it's so close. So once we get that power surge off of the 20, it's going to probably exceed 5.40 up into the $6 range. So that's what we're waiting for. So I appreciate you hanging out with me today. It's Monday, 1:48 p.m. We're going to go and take a look at our friends over at Trader TV Live. We haven't visited those guys in a while, so I figured it'd be right to visit those guys. Trader TV Live. All right, here we go. Let's see here. Watch Trader TV Live on YouTube. So now we're going to switch over to these guys. Hope you stay informed, stay in tuned. We will be going into the 2 o'clock hour. I'm going to find some good psychology. I had to think about that for a second. Psychology trading. What is it called? Trading psychology. I don't know who we'll be having up today. Initiation gaps. How to trade initiation gaps. So, here we go. I think. Here we go. Here we go. Here we go. Here we go. Oh boy. From the poorhouse to the
early on
outcome.
RVSN, guys. Really starting its life back on January and 69 cents. So great trade for whoever was holding that bad boy along. But yeah, the only trade we've got on at the moment, NQ short.
Yeah, I mean, that is certainly, yeah, it's been, I see what you, because we did have those lower highs on the NQ, right? So it's definitely a look here. Let's hope we do the shimmy wick dance in the right direction here for you.
Ooh, right
Shout
back
out
down
to
we
Shaq.
go.
Also, looks like a beak water is maybe.
Hopefully, I'm going to set up the profit taker beak wetter. You know how I roll, Adara.
Yeah.
But yeah, right now, still definitely a lot of trouble in paradise here.
Nice, yeah. I honestly, I cannot believe we have. I feel like this midday has flown by. I also just one last check for that Andrew Ditter super chat. Thank you so much on VRT.
Andrew.
I just wanted to point out. I looked at the monthly chart. I had an issue pulling up the 6 month with my chart shut down, but I have the monthly chart pulled up here. I like this $8 bounce. I think all in all I have to say is fantastic look. Fantastic look. This initiation gap too on the monthly is kind of interesting. I can't even really say it's initiation because we're just kind of continuing this trend, but really nice upward movement for VRT. It does not look like it wants to slow down. And congrats to you. I'm assuming you are in this trade. So what a look here. Also, I got out of Square, AKA one of the least interesting shorts that a person could be in. I wish Square had dumped it while I was in it. I mean,
Sorry.
No, it's okay. I'm joking. I'm joking. To be fair, I stayed in this as long as I did because we didn't really have any reason to leave. We started creeping heavily towards that 68, and I left. I did lose on this trade a little bit. My timing was just wrong. I have to admit, getting in the VWAP bounce was not the smartest thing I've ever done, and probably a little bit of FOMO because I got out of the short a little bit too earlier. So I think, in general, just going to learn from this trade. Not my best moment, but I'm just going to shout out to Jay-Z, dirt off the shoulders. Going to brush it off. Keep on going. Yeah, there we go. Because, I mean, I'm not going to learn anything by dwelling on how badly this went. All I'm going to learn is maybe be cognizant of that VWAP bounce, Adara, and don't do that with your life. And speaking of which, Tesla also bouncing off VWAP. Sorry.
Yeah, no, are you? Yeah, I know. Everything's bouncing now. I mean, we're getting a hammer candle here on the futures concerning me. All right, if you're not too busy, could we just do a quick recap of initiation gaps? Unless you're focusing on your trade, in which case we can do that after. I just want to ask what you absorbed from the lesson today. If you were to see an initiation gap, what are you looking for right away?
Yeah, for sure. So what I would be looking for is what is the extent of the gap? Is it a giant gap?
Yep.
And then also what I'd be looking for is volume. How much volume has accompanied that gap? And not just today, but compared to other volume.
Good.
Is this like a really outsized day for volume for this stock? Or is it a meh kind of day for volume? That's what I'm looking for.
Fantastic.
Then I also want to know, what is the momentum of this move upwards? Did we have this big gap up and then we just kind of petered out? Did we small cap gap it? Or did we big boy gap it, to use a Sharifism a little bit there? I really want to know the extent of that gap. Then I also want to see what we do after that. So a couple days later, do we have any other movement? Then let's say we had this gap up on Monday, and then on Wednesday, we're hanging out near VWAP. We're doing an interesting bounce. We're looking to continue this move. I want to look at maybe some confluence intraday with what we had in that gap. I want to see how it's shaking. I don't want to make a big immediate movement in, like, say, a swing or a long-term trade just because we had a gap up. I want to see other movement. I want to see confluence.
And if I can add one thing, I think you covered all the bases there, for the exception of one. Is it breaking out through a key resistance level, like a horizontal $500 level, or an upward channel, a downward channel, whatever the resistance level is it breaking through it? And if it's breaking through it by, what margin? Is it just a slight break, or is it a decided break? The one that we gave you an example of, obviously, was that Amazon 2017, 2018 price chart. Adara had it, I had it, and you had a decided break through the upward channel there. Shout out to you, Adara. Nice call on that. We're still holding this future short here, as I think Amazon's really tanking. Tesla's bouncing though, so some contrary indicators there. Nvidia still a smidge below 618. It's awfully strong as well. Big Kyle Burdett says NQ 30 minute. We had a hanging man. Now we follow with the move down. All right, my man. I'm still involved in this bad boy, and the beak wetter is already there at 95.25. So we'll see what we get on that move down. If we get a move down, we'll have to wait and see. Pack our patience for that. We're in the money on it, but we're not taking any profits here. If you guys have any questions or comments for Adara and I in the chat, whether it's about a specific name or you want to know anything about the lesson today, throw it up in the chat. I want to let you know that we're going to be talking about gaps all week. Tomorrow we're going to be talking about continuation gaps. And these gaps are found in the middle of the move. So what starts the move is the initiation gap and all the characteristics that come along with that today. We talked about that today. Tomorrow we'll be talking about the continuation gap, something that's found mid-move, in the move up, and how to play that, what to look for, and all the other details about it. So make sure to tune in tomorrow with Adara and I, where we will be talking about gaps the rest of the week. Big Mike, thoughts on AMD? AMD, look, it's a monster stock. Adara, when is it reporting again?
Tomorrow after close.
So AMD reporting, so make sure you're with us tomorrow. But look, on the day, it's weaker on the day today, if I could say that. We've been rejecting off yesterday or Friday's closing print. Let me show you where that is. This is the closing print from last Friday, and when we bounced into that 177.25 level, we rejected with the swiftness, as Adara likes to say, down back into 175.5 over here. So we'll have to wait and see what AMD does the rest of the day. But I would say, look, AMD is going to be in play all week after tomorrow, Adara, because we will be getting earnings tomorrow at 4 p.m. And then we know what's going to happen from there. There's going to be an earnings call. There's going to be announcements. And there's going to be all sorts of big money positioning, which is going to create the volatility on this name. Pack your patience. AMD is going to be in play all week.
Can I pontificate on AMD for a moment?
I love it. Go.
I like these. Look at this kind of flattish bottom in the lower highs.
Where am I looking?
I just think,
Point. Yeah.
here. So we have this,
This over here?
175 bottom, and then we come to the bottom again,
Bang.
and we have lower highs.
Absolutely, bang.
I just wanted to.
That's basically the IB low, because this excludes pre-market action.
okay.
That's the IB low from Friday, and we had almost the same IB low today. So good call on that. The only thing though, Adara, would you say you see a succession of lower highs? High.
I was
high,
going to say, yeah, I think so.
high. Yep. Flat bottom break.
And then we
through
have that high.
Neil's waving at me.
Hi.
Right.
Oh, yeah, hi.
Hello.
I get it. Just hi. Hi, Neil. Also, Neil, in the chat.
patience and a snack.
Yeah, I was going to say pack me. Yeah. Don't want to be a hungry
You don't want to be
trader.
hangry, right?
No, and I feel like being hungry does impact your trading. Like, this is a
yeah.
real thing. Where it's like,
Oh, yeah.
your brain, it impacts your brain. So, of course, it's going to impact your trading because you do need your brain to be on when you are trading. Although, I will admit, I made some, not the smartest trades today, but all
you
we can do
hungry?
is learn. Maybe I was. Maybe I was.
okay,
Maybe I
okay.
needed to pack patience in that Samsonite along with my patience. Or sorry, pack snacks with my patience there.
Adara, I wet my beak there on the dip, so it filled. My trigger did fill. And, I'm still right on the day. All right? Quite frankly, still.
Oliver was
I'm
the
back
wet
to
beak.
Greensville. Oh, my God. Back to Greensville, but I was in
Oliver
Redville
wet my
vis-a-vis
beak.
Meta.
That was
So
the
we're gonna have
first
to wait and
video
see
I
whether we can
watched.
continue to print.
And
because we
Oliver
gave
said,
back
"I like to
everything."
wet my beak.
Literally, we gave back almost everything.
So
on
you
that
know
Meta
they
trade,
watch.
on the Tesla trade because of Meta. So it'd be great if we could print on this down move here. But I feel like the buyers are stepping in and boosting, the future. These Mag 7 names on the dips. We're quite consolidative south of 17.6. We're not really rejecting off it, even though the wicking dance was quite clear. We couldn't hold 17.6. We were wicking into it from the south side and rejecting it, but we're not getting that big boy move down. And that's the reality of the situation. So we'll have to wait and see. About a minute left, Adara, on the show before we send it up to Brendo and the big kahunas who will be taking over and taking us through Power Hour.
Yeah, let's power up for Power Hour. For now, I will lament once more about Tesla. Like I said, as Neil says, when in doubt, zoom out. I should have zoomed out and seen that although we did have these lower highs and lower lows, we also did have a VWAP bounce, and I should not have gotten involved in a short here. That being said, my area of interest for Tesla, still that 188.40, 188.50 area. I got out because we did make a move around 188.40, but really, to what extent? We're now still just bouncing around 188.40, 188.50. I would keep an eye on this level. Take that for what you will. You can take that with a grain of salt, with a grain of electron, with a grain of Model Y, but I do think this area could be of interest, and that would be my area. A lot of people in the chat saying, where's Tesla going to end up? I think Tesla needs to figure out its life at this area first, because we've been consolidating here for an hour and a half, which in Tesla terms is a pretty long time for Tesla to be in this range. I would that'd be some food for thought there, but it is 2 p.m. Thank you so much to everybody. Thank you to Bears versus Bulls, everybody in the chat. We will see you tomorrow at the same bad time and the same bad channel for some more gaps. But for now,
Hey guys, yeah, 2 o'clock on a Monday afternoon here. Let's get back into the last 2 hours of a trading session that's turning into a bit of a choppy one across the board, let's be honest. And has never looked back. So good luck for BTC. We'll touch on some of the crypto names coming up here. Oil itself really has been a little bit disappointing today, but we had a bit of a sell-off, to say the least here. XOM with the equities, individual equities. XOM straight downside out of the gate this morning. It did bounce, but has been sideways ever since. It's worth noting on those. Volume just not there today, right across the board. Relative volume in the energy group, non-existent. Crude down 1.3% currently, with about 30 minutes to go in the pit session over in Chicago. There's Tesla, the big winner on the day so far. Nice look, 2.6% back higher after the earnings debacle that was last week. Uber with a nice day as well, 2% to the upside for Uber today. Amazon, Costco standing out. Coke up there as well, 0.5%, top right corner. CRM almost 2%. Adobe 2.25%. So there is strength in tech, but coming from some names that we haven't talked about in the past couple of weeks. Oracle downside, meanwhile. Google 0.3 only. Apple red on the day. Some of the chips are strong ahead of AMD tomorrow. AMD kind of flat overall, though, as we head into hours of the day. If you're with us in the pre-market this morning, we touched on a whole bunch of things to kick things off. Microsoft.
Okie dokie. So it is our 2 o'clock hour here at the Living Legacy Group Live, and we're going to go right into the psychological trading. And we're going to stick with this one here. It says 5 minutes trading, 5 minutes trading strategy indicators for beginners. So hopefully the people that have joined me or that are joining me are beginners, because I want you to be beginners, even though you are well versed. If you would just put aside your ego. Wow, where's that one? That was a good one. The ego. He had one. Where's that ego? I don't know. But it was really cool. That was a good one. But let's listen to this one. It's 21 minutes, 27 minutes.
We're going to need.
And we're going to go right into it. All right, thanks.
We're going to need 4 things, right? We're going to need a chart. Now, we're going to need a short-term.
Mm-hmm.
chart. Now, this chart can be a 2-minute or a 5-minute. You choose. The 2-minute has some advantages, and the 5-minute has some advantages. So you might have to experiment which time frame works best for you. Now, a lot of people operate on platforms that don't give them the option of having a 2-minute, and then the platform makes your choice for you. You have to be a 5-minute trader. But if you can do a 2-minute, you're going to have to experiment with both 2 and 5-minute to determine which time frame operates best for you. What do you feel more comfortable with? But there is no wrong answer, okay? We're going to put a 20 simple period moving average overlaid on that chart. We're going to put a 200 period simple moving average overlaid on that chart, and we're going to utilize my position concept, okay? This 2-minute chart of BABA, as you can see, has a simple 20-period moving average laid over it. That's the blue moving average, as you can see. And then we have the 200-period moving average.
Want to get rid of this. Can I move it? At least.
Overlaid on the chart. Now, in my opinion, no short-term oriented chart, in fact, no chart, whether it's long-term or short-term, should ever be looked at without these two key moving averages. There are other relevant moving averages, but there's none more relevant than these two. The 20 and the 200 are anchored on every single chart. Make sure you're looking at every single chart through the eyes of these two moving averages. And when you're operating with a moving average system, you always want a buddy system, never a one moving average system. You want a two or more moving average system. I prefer a two moving average system. And in that two moving average buddy type system, you want a short-term oriented moving average paired with a longer term moving average. We've got the BABA 2-minute chart. We've got the two moving averages laid over it. Now, I want to now talk about my position concept in relationship to three things, okay? For the most part. The 20-period moving average is item number one. The 200-period moving average is item number two. And this is yesterday's data. This is yesterday's data. We need to grab yesterday's late day price data. So we don't want to grab yesterday's entire day, but we're going to grab yesterday's late day price data, just this chunk right here. So we've got the three items, right? For the most part, we've got the 200, we've got the 20, and we've got yesterday's late day price data. Now, when we take these three things and lump them together, we come up with sort of like a zone. Now, as you can see here, if the stock opens above this zone, the odds immediately flip to going long, buying. If we open instead, right, below this zone, let's do that now, boom. If we open below the zone, the odds would suggest that the better plays are to the downside. So above the zone of the three items, the 200, the 20, all right, and yesterday's late day price zone or range, here's the zone. If the stock opens the next morning above, the odds are higher to continue to the upside. If the next morning the stock opens below this zone, the odds are much higher for an acceleration to the downside. Now, this is one of the key components of becoming a consistent trader, getting the probabilities right. This is the $64,000 question in trading, right? What's the probability of the stock going up versus going down? And if you can get the probability right, then it just becomes a numbers game. So if 72% of the time, if we're up above, 72% of the time you get more up. And if you open below the zone, 72% of the time you get an acceleration to the downside. Now it just becomes a numbers game. And I teach my traders that the numbers game is based on the number 20. Just do 20 trades. After 20 trades with a 72% probability ratio in your favor, you're going to have much more money on the 20th trade than the money you had when you started on trade number one. So once you get the probability right, once you know your numbers, once you know your statistics, it's just repeat for 20 times, collect. Repeat for 20 times, collect. The problem is that most novice traders have no numbers. They have no probability ratios. And so therefore they can't form a plan, because before you form a trading plan, you need to know your numbers. You need to know your probability numbers. And this is something that I teach all of my traders. I teach them the probability numbers for virtually every single event that technically occurs in the markets. Now, okay, so we've got the general concept: above the 3 items, below the 3 items, the 72% chance of follow through. Up above, 72% chance of follow through to the downside. Let's continue. Boom. Now, just because we're up, we have to now, if the stock opens above those 3 items, the stock, the 20, the 200, the following morning, we have to now rate the up. How far up is it? Is it just marginally up? That's 1. That's 1. That's level 1 up, marginally above the 3 items. Are we far above the 3 items? That's 3. That's position 3, not just up, not up, up, but that's up, 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 okay? And then we have the middle. It's not close to the 3 items. It's not super far from the 3 items either. It's sort of snuggled in there between. Now, this is subjective, but this is where knowing your stock comes into play. I teach my traders that you need to trade the same stocks every single day for the vast majority of your lives. This is where your edge comes in. No professional skips around. Novices, untrained novices skip around and they're news chasers. No, we don't do that. We get a list of 10 stocks that become our family members, and we become so
Listen to 'em.
intimate with the daily activity.
That's why
and
I've
the
been holding on
participants
to this
that
one.
play in these 10 stocks that it's almost as if the stocks sit down next to us and say, listen, Oliver, I just want to let you know I'm about to rock to the upside. Thank you very much, stock. Let's go. And so this is where knowing your stock comes into play, where you're familiar with the stock and you know that's an excessive gap to the upside. That's position 3 for this stock. And then, of course, it's very easy to know position 1. It's just marginally above the 3 items. Okay? But it is this third position that really requires that you become familiar with your stock to know what's an excessive gap from a historical basis and what's a what's a gap that's not that excessive from a historical basis. Okay. So we've got the 3 positions. Now, from position 1, the odds are higher that you run to the upside. From position 2, the odds are good, but a little bit less that you run to the upside. Not as good as 1. And if you are in position 3, the odds are actually better to drop to the downside. So position 1 has the highest odds of all the gaps. The marginal gaps just above the 3 items have the greatest odds of running. You start to lose odds the higher the gap. All right. This is still good odds. It's still better odds to the upside than down, but you lose some of the odds. Not quite as high as position 1. All right. This is position 2. And then position 3, the odds flip. The excessive gaps way above those 3 items actually flip it to being a better play to the downside. A counter gap play is better from position 3. Very important to understand. I'm teaching you my position concept. This is my position concept. Okay. Knowing your odds, knowing where you are helps you know what your odds are, which helps you create the proper trading plan around those odds, which then leads to you playing the numbers game. Playing the numbers game, getting to 20 trades is what creates consistency on the part of a trader. And that's the flow. Know your position, then you know your odds, then you know what your plan is, short or long, and then play the numbers game. Just do 20 trades every single time the same way, and you should have more capital at the end of the 20th trade than you do on the first trade. If not, something's wrong with your analysis on the odds. Okay, now let's continue. We've got the down. What if your stock opens below? Same thing. We've got the same three positions, guys. We've got, check this out. We've got open just below the three items, okay? This is going to have your highest odds of an acceleration to the downside. Now, here's a little bit further down below the three items. The odds are good, but not as good as the first position, all right? And then you have the really deep position below the three items. The odds here are better to the upside than they are to the downside. Okay, three positions. Position 1, close, super odds. Position 2, good odds of follow through to the downside. Position 3, better odds to go reverse. All right, and that is my position concept. I truly wish I had a lot more time because there are a lot of nuances regarding this concept. And I will tell you that just like real estate, the way you make money in the real estate market is by three ways: location, location, location. The way you become a master trader in this business, three things: position, position, position. It all starts from position. I wish I had more time with you. Okay, but that's my position. That's the basics of my position concept. Okay, let's go. Now, we have to go to a concept of mine that helps traders immensely solve this dilemma regarding gaps. Position helps to solve it greatly, but this completely solves the confusion around gaps 100%. We're going to take the gaps that occur and we're going to fill them in. Let me show you how we do that. Now, I want you to see, this is a chart of Baidu today. This is today's chart. This is today's chart. Now, this is a 2-minute chart. I want you to take a look at Baidu's first 2-minute bar here. This is the first 2-minute bar. Now, look at the position of the first 2-minute bar. Now, grab your three items, right? You're going to grab the 20-period moving average here.
Can you see it?
You don't even need the three items, just the two items, actually.
Just two
grab
items.
Grab the 20-period moving average here. Grab the 200 here. Now, the stock is right above those items. That's position 1.
Okay.
This is position 2. And this is position 3, which, as you can see, the stock starts to
level
tire.
off.
But we start the day off in position 1. The flow from position 1 is much more highly likely than the flow from position 3. As you can see, flow to the upside halts or stops. Okay? Now, what if, check this out, guys. This is really interesting. Check this out. What if the first bar of Baidu wasn't there and the first bar gapped up? Now, look at this. Look at the scenario. This is very important. This is the crux of the whole talk here, guys. You got to get this. Now, let's assume this is the first bar and yesterday's activity ended here. You're gapping up above yesterday's activity. You're gapping up above the three items, the 20, the 200, and the stock. But you're still in position 1. You're relatively close. So now what do you do from this gap? You do one of two things. You play
the color game.
The color game, which is buy above a red bar, buy above a red bar when you get one, okay? Or you play the power game, buy above a power red bar. Buy above a power green bar, buy above it, stop below it. Here's a power green bar, buy above it, stop below it. So you've got two games to play, right? The power game, buy above a power bar, or the color game, buy above a red bar. These are the two primarily games we play. Now, guys, This is more sophisticated than it sounds. I just have this unique way of breaking it down so that a 12-year-old can understand it, okay? So we're buying above big bars and we're buying above red bars. And these are your entries. Those are your entries. But you've got to do those entries from the right position. Get the position right, then you enter, then get your protection right. Your protection is under big bars, all right? Always protect yourself under big bars. You get another one, protect yourself under the big bar. Okay, now let's go. Now that you know the concept, what we need to do whenever we get a gap is to fill it in. So take a look at this. If Baba gapped here, in my mind, I would fill it in as if it didn't gap. This eliminates the confusion of what I'm dealing with. Fill in the gap as if the stock didn't gap there. Fill it in as if it traded to the markets open. Fill it in your mind, or take a pen and literally on your chart, fill it in. The pen that I use is called Epic Pen. Download it. It's absolutely free. I use it all the time, every single day in my trading. Epic Pen. Download it. Free pen. Draw the gap in. All right, as if it didn't gap. Start from yesterday's closing price and draw it in. And this will give you a clear picture of what you're dealing with. So do this. Let's take a look. This is an old chart of Baba. This is not today. So notice where the open is. Notice that it opens above the moving averages, right? It opens above the stock. It opens above the 20. It opens above the 200. Here is the zone I was telling you about. And we open here. Now here's probably 1. This is probably 1 plus. All right. This is probably 2 in this area. I'm sorry. Shouldn't do that like that. But you get my point. How do I do this? Erase. So this is probably 2 here. And up here, you've got category 3. So you're still pretty low here, which means that the odds are good for some flow to the upside. If you opened here, the odds would be better with flow to the downside. All right? Okay. Now, but what you need to do in this scenario, some people are confused by this, but if you fill the gap in, your confusion disappears. Look, boom. Now, this means buy above power, or buy above the red bar, the next red bar. Buy above power, right? Or buy above the next red bar. Buy above red bars. Buy, here's a red bar, buy above red bars. Here's a red bar, buy above red bars. Of course, we take profits away. I covered this in greater detail yesterday. Away from what? Away from your 20-period moving average, away from your 20-period moving average, away from your 20-period moving average. So once you get away, you're taking profits. Buy, once you get away, you're taking profits. Buy, you're buying near. Once you get away, you're taking profits. All right? Not comfortable with that camera going out on me. Might still be working, but okay. Good. We're making progress, traders. We're making progress. Now, let's take this quick look at win. This is an old chart of win. See the gap up? All right. Now, fill the gap in. Boom. Look at the position. Position 1, position 2, position 3. We're still not that excessively above, not so excessively above. And boom, the stock runs to the upside. All right. So what are you supposed to do? You buy above a power bar. You get a power bar. You know that the odds are better to the upside. Wait for a power bar, or get in above a red bar. You're playing 2 games, the power game or the color game, whichever one comes first. If the power bar comes first, we buy above the power bar. If the red bar comes first, we buy above the red bar. We don't choose. We don't say, I like the power bars better than the color bars. No. We don't say, I like the color bars better than the power. No, we take whatever we get. We take what the market gives us. And we protect ourselves. Why? Because every play is not going to work. There's nothing 100% in life. And losing is a very important part of trading. You just have to lose correctly. You can't ever eliminate losing. What you can do is eliminate horrible losing. All right? And I teach my traders how to do that. Now, by the way, guys, I fund my traders. So it is really very important that I teach them well because they have my capital in their hands. And if I don't teach them well enough, they will lose it. And they have no responsibility to pay me back from their losing trades. I take 100% of the losses. So trust me when I tell you, I am on them, training them, pouring every single thing I know, all 38 years of my trading experience into them every single day of their lives. All right, good. Guys, here, excessive gap to the upside. Now, you got to see that this is way above the items. This is not position 1. This is not position 2. This is super far. Boom, fill that in. Look how ridiculous that bar looks. Look how ridiculous that bar looks compared to the others we did. All right, not as ridiculous. Not as ridiculous, right? But look at this one. This is super ridiculous. So when you fill it in, you see how ridiculous that is. All right? That's not a bar you want to buy above. It's too excessive. The people who own the stock from yesterday or a week ago are definitely going to be sellers. Excessive gaps bring in heavy selling because the profits come in an instant. Huge profits come in an instant from those who owned it previously. What would you do if you got an almost $10 gain in a stock that moves about 85 cents on average a day, and in one fell swoop you got $10? You're going to want to take profits. Profits are selling pressure, which brings the stock in. Excessive gaps statistically bring in more selling than buying, no matter. People think good news that it causes excessive gap will cause the stock to run. Wrong. Good news is a greater incentive to sell on an excessive gap. It's just the reverse. So what are we going to do? We're going to look to play it on the downside. What are our 2 games on the downside? We're going to wait for a solid red bar, short below that solid red bar, or we're going to wait for a green bar and short below the green bar. One is the power game. The other is the color game. Okay? Boom! There you go. Power red bar. Let that first red bar happen. Mark off the low, and then you come in here with your missile. Bring it all the way from the left here. All right? An aggressive missile. Uh-oh. Boom! Right there's your entry. There's your stop. Now, something really interesting about this chart. I can talk about this chart for an hour, actually. Gaps tend to become half filled and pause to reverse. So look at the halfway mark of the gap for the most part. Boom, 50. That's my 50% concept. And look at where the stock started having trouble continuing its move to the downside. The halfway point of gaps is a very, very important zone. I teach my traders a lot regarding this as well. All right. Now, I love this game. All right, let's go. Let's go. Take a look, take a very quick look at this. What is this? Qualcomm, old chart, but still the concept is the same. We're gapping up. Okay. Look at your items. All right. It's not excessive. Excessive would be up here. All right. This is still kind of one area. So what are we doing? I want to show, this is really interesting. You see, do you see this? Do you see the halfway mark? Look at this is where it opens. No, I'm sorry. That's wrong. This is where it opens. Look at where the stock opens here. Look at the previous day's close here. Now go halfway. 50%. Look at that. Right at the 50% level, green takes out red. Boom! Green takes out red. Come from way over here. Boom! Away from your moving average, you're taking profits. green takes out red near the 20-period moving average again, boom. This is not rocket science, this game. There are far too many of you overcomplicating this game. You've got that adult mentality instead of the 12-year-old mentality. There's 2 bars, green ones and red bars. There's 2 moving averages, 20-period moving average, 200. There's 2 positions, above those moving averages, below those moving averages. There are 2 trends, uptrend, downtrend. There are 2 actions, buy, sell. There are 2 results, win, loss. Get these 2s correct, traders. And oh my God, what a career you have in this business. Most people are out there fooling around trying to figure this stuff out on their own. And that's the hardest way possible. Guys, fill this gap in. You know what to do. Fill that bad boy in. Fill it in. You're now below the moving averages. Fill it in. Fill that gap in. Now look at that 50% mark. I love this game, and I love this game. I love it. You know what to do now. You know what to do.
That was totally awesome. This is why I take notes and follow Oliver, because his stuff works, man. So, hey, thanks for joining me. I'm going to cut it loose today early. I had a late night last night. So, hey, stay tuned for the next episode of the Living Legacy Live group. And we will get back to you tomorrow, same bat time, same bat channel. Hopefully we'll get enough viewers to where we can have some interaction along with some questions and stuff like that. So, hey, good seeing you. We'll see you tomorrow.
Welcome to P&D Uniforms and Accessories, where we treat all of our customers just like family. Your one-stop shop for all things uniforms. We carry a wide selection of top-quality uniforms from school to medical scrubs, plus church and choir gear. P&D Uniforms and Accessories have been in business for over 15 years. We are centrally located at 20936 Kelly Road in East Point, Michigan. Open 6 days a week, Monday through Saturday. Give us a call today, 586-777-3801. P&D Uniforms.